Financial Management, Chapter 1. Basic concept of financial management. Scopes and objectives of financial management. We'll discuss MCQs. First one. Basic aspects of financial management are procurement of fund and effective utilization of fund, or profit maximization and wealth maximization, all of the above, none of the above. What is the answer? So, two basic aspects. What are all the procurement of fund and effective utilization? Objectives of financial management are procurement of fund, effective utilization of fund, profit maximization, wealth maximization, all of the above, none of the above. Profit maximization and wealth maximization. Clear? Aspect is different, objectives are different. So what are all the basic aspects? Procurement and effective utilization. What are all the objectives of financial management? It's a commonly committed mistake. Whenever question asks the aspects of financial management, they are writing profit and wealth maximization. Whenever they are asking for objectives of financial management, they are writing what? Procurement of and effective utilization. Therefore, it should be very careful. Clear? The basic aspects of financial management is also called functions of financial management. One of the examinations, they ask the functions. Functions as well as basic aspect is equal to procurement and effective utilization. Next. Procurement of fund by way of own fund or borrowed fund or own fund and borrowed fund, none of the own and borrowed. Procurement of fund involves identification of source of fund, selecting the finance mix, AOA, all of the above, none of the above. All of the above. We have to identify what all the sources are there, and out of which source is preferable. We have to select the finance mix. What is called source? Own fund, borrowed fund, equity share capital or preference share capital or long-term loan or debenture. These are all called sources of fund. In that source, whether equity is preferable, preference share is preferable, long-term is preferable, debentures are preferable, in what combination? That is called selecting the finance mix. Therefore, procurement of fund involve both identification of source of fund and selecting the finance mix. Characteristics of source of funds are risk, cost, control, all of the above. All of the above. Very good. High risk goes to own fund or borrowed fund. AOA, all of the above, none of the above. Risk will be high in case of borrowed fund. Risk always based on repayment. If I'm going to depend more on others' fund, borrowed fund, any point of time I have to repay, therefore risk will be high. But in case of own fund, shareholders fund, only at the time of winding up, you have to repay. Therefore, risk will be less. Therefore, high risk goes to borrowed fund. Are you comfortable? High cost goes to own fund, borrowed fund, all of the above, none of the above. Own fund is costly. Irrespective of whether earning and profit or not, I have to pay interest. But here, cost represent borrowed fund means interest, own fund means dividend. Interest, irrespective of the profit, I have to pay. But payment of interest remain constant, fixed in nature. But dividend, depending upon the profit, I have to pay more and more dividend. Right or not? More profit, more dividend. Moreover, if I'm going to pay interest, borrowed fund interest, if I'm going to pay, tax benefit is there. I can debit in the P&L account. It's expenses. Accordingly, profit will come down. Profit is coming down because of the payment of interest. Then tax also will come down. So one hand I am paying interest, another hand I am saving the tax. But in case of own fund, I have to pay dividend. If I am going to pay dividend, out of profit, you have to pay dividend. There is no tax benefit also. Because of that, high cost goes to own fund. Are you comfortable? High control goes to own fund or borrowed fund, all of the above, none of the above. Borrowed fund means we can have better control. Right? Only have to pay interest. But in case of own fund, shareholders only going to control the company. Everything you have to inform to the shareholders. You have to convene the meeting also. Moreover, shareholders are owners of the company. They are having voting right also. Therefore, shareholder can control the company. Company cannot be in the put to control the shareholders. Therefore, high control goes to borrowed fund only. Dilution of the control is possible, own fund or borrowed fund. In case of own fund, dilution of the control. Okay. So shareholders fund means dilution of the control will be there. Own fund, borrowed fund means I can have the better control. Present value of benefit minus present value of cost is equal to profit or wealth or growth, all of the above. What is the answer? What is the answer? Present value of what? Benefit minus present value of cost is equal to wealth to the company. What is that called? Wealth. Wealth maximization concept. Next. Wealth essence. Wealth maximization concept itself, profit is for the 1 year. Wealth is for the long term. The moment long term comes into picture, we have to do time value of money concept. Therefore, after considering time value of money, wealth maximization comes into picture. Are you with me or not? It emphasizes on short-term objects. Profit maximization, wealth maximization, all of the above, none of the above. Profit maximization. Important decision for achieving the wealth maximization: investment decision, finance decision, dividend decision, all of the above. All of the above. So with respect to wealth maximization, we have to do what? Investment, finance, and dividend decision, all the three decisions. Which one is the advantage of wealth maximization? It's a long-term object, recognize risk and uncertainty, considering shareholders' return, all of the above. All of the above. Everything is for wealth maximization. Wealth maximization, it's a long-term object. Wealth maximization recognizes the risk as well as uncertainty. Wealth maximization considers shareholders' return. Therefore, all of the above is answered. Then, which one is not for profit maximization? Easy to calculate profit, easy to determine link between finance decision and profit, must for survival, recognizing timing of return. What is the answer? Recognizing timing of return is not for profit maximization. So timing of return, time value of money concept is applicable only for wealth maximization, not for profit maximization. Next. Role of CFO includes planning, source of procurement, investment decision, risk management, all of the above. Very good. All of the above. Next. Emerging issues which affect the future role of CFO. What are all the emerging issues? 9 emerging issues are there. Okay, GSTRN. Okay, GST return. Right? G for globalization, R for again R for risk, again R for GSL. Yeah, okay. G for globalization, S for stakeholders management, again S for strategy. GST for technology, transformation, talent, and RRR. So 9 emerging issues. Globalization, stakeholders management, strategy. B, technology, transformation and talent. C, regulation, risk and reporting. D, all of the above. So what is the answer? All of the above. So 9 emerging issues are there. Shortcut for mnemonic for remembering the same. GSTR. GST return. Okay, GSTR. S square T cube R cube. Okay, good. Which of the following statement is correct? A. Financial accounting is on accrual basis, whereas financial management is on cash basis. Is it right?
Yes, sir.
Yes. Account is on accrual basis, management is on cash basis. Correct one. Financial accounting is to collect and present the data, whereas financial management is for planning, controlling, and decision making. Is it correct or not? That is B also correct. C. Financial management begins where financial account ends. Right or not? That is also correct. All of the above. So the answer is all of the above. Good. Next. In corporate, owners are not acting in management, active in management. So there is a separation between owners and the manager. It creates a shareholders problem, stakeholders problem, agency problem, none of the above.
Agency problem.
Definition of the agency problem is like that. Okay, agency problem. Very good. Types of agency cost includes monitoring, bonding, opportunity, structuring, all of the above, none of the above. 4 agency costs are there. What are they? Monitoring cost, bonding cost, opportunity, structuring. Therefore, A and B, all of the above. All are comfortable? Which of the following statement is correct? Always read the question carefully. Sometimes incorrect will be there. Okay. Here, which of these statement is correct? A. Cash flow of the firm are inadequate to meet all its current obligation is financial distress. Is it correct or not? Cash flows are inadequate, so that financial distress will come. Right or not? Correct. B. Insolvency means inability of the firm to repay various debts, and it is a result of continuous financial distress. Is it correct or not? Very good. That is also correct. All of the above, none of the above. Therefore, what is the answer? So, all of the above is the correct answer. Focus of financial management is mainly concentrating with the decision related to financing, investing, dividend, all of the above. It can contribute one, all of the above. It considers all of them. Next, the main objectives of financial management is to A. Secure profitability. B. Maximize shareholders' wealth. C. Enhancing cost of the debt. D. None of the above. What? I'll repeat. The main object. What are all the objectives of financial management? Profit maximization and wealth. Which one is the most important object? Profit is must, wealth is best. So wealth maximization. Therefore, option B is the correct one. Are you able to follow or not? Maximizing shareholders' wealth is the correct answer. Are you comfortable? All of you? Next. The shareholders' value maximization model holds that the primary goal of the firm is to maximize its accounting profit, liquidity, market value, working capital. What? Wealth maximization focusing on what? Market value. Profit maximization only going to focus on profit. Right? Shareholder maximization model nothing but what? Wealth maximization. So wealth maximization going to focus on not liquidity, not for profit, not for working capital. Everything is short term in nature. Only market value is the long term in nature. So wealth maximization itself for long term in concept. Are you comfortable? Good. Wealth maximization approach is based on the concept of cost benefit analysis, cash flow approach, time value of money, all of the above. Cost benefit you won't see in wealth? All the above. All of the above. Right? Combination of all only wealth maximization. We have to do cost benefit analysis. Present value of cost, present value of benefit. We have to do time value of money. Cash flow approach also you have to see, because financial management itself based on cash inflow and outflow you have to see. So all of the above. Next, management of all matters relating to organization's finance is called cash inflow and outflows, allocation of resources, financial management, finance. Financial definition of the financial management itself. Financial management. Which of the following is the disadvantage of having shareholders wealth maximization goal? Disadvantages of having shareholders wealth maximization goal. Emphasize on short-term gains. Is it right? Wealth maximization is long-term or short-term? Long-term. Therefore, A not applicable. B, ignores the time value of return. No. It is considering the time value. Right or not? Therefore, that is also not correct. Require immediate resources. And D, offers no clear relationship between financial decisions and share price. What would the answer? The answer is A is not correct. B is not correct. Required immediate resources. It's a long term. Therefore, immediate resources is not possible. C is also not correct. Therefore, what? D. Offer no clear relationship between financial decision and share price. Clear cut, we can't about the same. Right? So it's a frequently asked question. Objectives of financial management itself break into two different questions. Many questions. Objectives of financial management, nothing but profit and wealth maximization. Difference between profit maximization and wealth maximization. Argument in favor of profit maximization. Argument against profit maximization. Argument in favor of wealth maximization. Arguments against wealth maximization. The question create பண்றோம். So if you remember the table, what I given in the book, அதை பார்த்தா போதும் different between profit and wealth. அதுலயே எல்லாமே இருக்கு. Those to be alone in LMR book you have to refer. Clear? Next. The most important goal of financial management is profit maximization, matching income and expenditure, utilization of asset effectively, wealth maximization. Wealth maximization. To achieve wealth maximization, the finance manager has to take careful decision in respect of investment, financing, dividend, all of the above. Similar, same question we discussed, right? All of the above. Early in the history of finance, okay, olden days, an important issue was liquidity, technology, capital structure, financing option. Early stage, liquidity. Running the business is difficult. Liquidity is not day-to-day affairs we need to finance. Okay, so beginning of the era, old history and all, liquidity is a major problem. Now that is not a. We are going for wealth maximization concept. Next, which of the following are microeconomic variable that helps define and explain the discipline of finance? A, risk and return. B, capital structure. C, inflation. All of the above. Discipline. Solra. Everything is called discipline. Okay. So risk and return also you have to see. Capital structure also important. Inflation also important. Therefore, all of them. Financial management is mainly concentrated with the which one? Financial management is concentrating for what? A, acquiring and developing asset to forfeit its overall benefits. B, acquiring and financing the managing asset to accomplish the overall goals of the business enterprise. C, efficient management of the business. C, and D, sole object of profit maximization. What is the right answer? B is the correct answer. What is the B? Acquiring and financing and managing asset to accomplish overall goals of the business operation, business enterprise. Next, which of the following need not be followed by the finance manager to measure and emphasize shareholders' wealth? Need not be filled. What is not required? Accounting profit analysis, cash flow approach, Cost benefit analysis, approaching for time value of money. Already we discussed in different question, right? So profitability analysis is not the criteria. Other things are important for shareholders' wealth maximization. So cash flow approach is important. Time value of money is important. Cost benefit analysis is important. What is not important? A, accounting profitability analysis is not important. That's all, no? So now we can able to answer MCQs also. So by way of MCQ, you can score more mark. Within less time, you can score more. That is more important. Concept, if you learn the concept within less time, happily you can score more. Clear? So with respect to basic concept, after all, you have to remember what are all the basic aspects of financial management. Then what are all the characteristics of source of fund. Then objectives of financial management. Other sub-classification, wealth maximization, profit maximization, argument, favor in the. Then 5 major roles of our CFO. 9 emerging issues which affect the future roles of CFO. Everything story only. Yeah. Next, difference between financial accounting and financial management. Agency cost. Next, financial distress and insolvency. What are the difference? That's all. If you remember those questions, answer more than sufficient. Okay. Read our LMR book carefully. All the points are there. Revise panna, happily you can score the mark. Okay. For your quick correction purpose, I have given the packet size book also. Right? Yes. Here all past exam questions. Theory parts, everything I have given the bullet point. 5 major roles, 9 emerging issues, 2 basic aspects, 2 objects. Point wise. So that all the point you forced to remember by way of studying the packet size book. And the second half of the book, I have given all formula, what is relevant for the examination. But this packet size book itself more than sufficient for your scoring more mark. Okay. So make use of it. Happy with the basic concept? Good. Good.